Very good. So my name is Fredrik Backman. I'm a general partner at OpenOcean. We have a background from being co-founder in the MariaDB database company. We invest in data-intensive software in Europe. We do A and pre-A, maybe seed plus rounds typically. So that's what we do.
And I'm Sakari, Pihlava, general partner at Vendep Capital. We are a SaaS specialist fund for pre-Series A in the Nordics and Baltics. And the first company we invested in from our funds was AlphaSense, and the last one is Videoly, which we did 3.5 weeks ago.
And very briefly on me, I'm Bob. I'm a principal from Ox. We're a slightly later stage investor in B2B SaaS companies in Europe, kind of between the Series A and Series B stage. Good. So I mentioned we had lots to get through. Obviously, it's been a busy year for SaaS founders, as every year is, but this year has been particularly unusual. The first question I wanted to ask was, from your portfolios of SaaS businesses, what tactics have you seen from founders to weather the storm in what's been a difficult year? And we're going to avoid saying the kind of standard thing where we told our founders to kind of think about cash conservation. We're going to go deeper than that and kind of give kind of more thoughtful answers. So what have people kind of been focusing on this year? Let's start with Patrick. You're up first. What have you seen?
So I will start with cash conservation because actually most of our more mature companies doing kind of 10 million revenue or more, they actually turn themselves profitable. So in March and Q2, they focused really on making themselves profitable. And for the other ones, they really worked on getting longer runway of up to 18 months to really weather the storm, so to say. But the real kind of focus in that cost cutting was focusing on the kind of most efficient go-to-market model to really be able to continue growing and scaling through the storm, actually. And we were a bit, let's say, scared in a way, or concerned in March that it might hit some of them bad, but surprisingly, they have all continued actually to grow, and some even really beating their plans and growing faster than ever anticipated. So I think there's a bigger, we come to that later, but the bigger shift in the market, I think that speaks to the opportunity even during these times.
I think in general also, like for founders, like the tactics might be different, but I think it was also interesting to see the ones who were actually able to kind of profit from it, like in one way or another, like figuring out new ways of getting to customers, or they're focusing on something different, like renewing their focus or focusing even tighter on their core customer group, which I always think is a great idea. But I really noticed that some founders were able to kind of use it to their advantage and not kind of just panic and see it as like necessarily like a negative. Of course, there was that like cash conservatism, and you had to kind of take that into account and how you can have the like a longer runway. But I think then great founders are also able to turn it into an advantage.
Not much to add, but I think just a couple of kind of case studies here. I think some of you guys know Rella, and they benefited from this acceleration of SaaS products by a great deal. So they do a similar to Dealroom, the similar platform, and they've simply launched a new product and then focused on serving the demand that there is for that change in the event industry, and really just nurtured all of the things that their customers tell them that they need. And I think now after 4 or 5 months and stellar growth, they already now know what their customers expect from next year and how the world has changed, and now they are focused on R&D. And then another, I think, point to make is that some of the companies, I mean, after cash conservation and focusing on things, the market is still there, in a flux, or budgets are still in a flux. I think just slowing down, hiring a little bit has helped many of the companies to extend, runways. We have one company that has runway till the end of 2021. So So yeah, second all those thoughts.
We've seen kind of similar things across the portfolio, and perhaps I was being unfair, suggesting not focusing on cash conservation, because obviously kind of in this environment, cash is the most important thing to kind of keeping the startup going. But that kind of naturally leads on then to a question of fundraising. I know from our perspective, the first few months of COVID, there were some kind of disruptions to the fundraising market in the EU for SaaS businesses. And I think kind of people were naturally asking themselves the question, what's next for fundraising? What have you seen being the major kind of barriers to fundraising for startups in your portfolio? Sakari, maybe you kind of kick us off from the Vendep portfolio.
Yeah, I mean, again, we were a little bit lucky in this situation that we had a couple companies, in discussion with the investors already. So we had Happel, Happy Signals raised, Series A rounds quite large too, and we have another one that is not public, but it's been closed already in August. I think the major hurdle just is that if you are not being tracked by a Series A investor and you're raising that Series A, and you don't have even if you get warm intros, the team just doesn't have the knowledge of your business model and how you work, and the investor has to learn all of this in a situation where you can't meet. So I think the importance of data and customer reference calls have shown time and time again that those are kind of the proof points that are being looked at relatively early on.
Yes, I think definitely. I mean, of course, people were focusing a lot on their portfolio, and I still see that today. I still know that at least some A-round investors or follow-on investors, for example, to our companies, are saying that they are not doing like new investments at the moment, like focusing on the fundraisings for their companies or their portfolio in general. So of course it has been quite a difficult situation for many founders, and then you just have to kind of figure out what the situation is and when is the right time to go for that funding round, and even in that stay even more focused, find like the best investors that can't kind of say no to the opportunity to invest, even if the situation, even if they're not that active on that side.
I think in the early stages, actually, I haven't seen a big impact. Of course, they need to be able to show KPIs and growth trajectory also now during COVID times, but the good ones, actually, there's good availability of capital. I think it might decrease though gradually, because for VC funds, it's actually harder to raise now. And the international LPs especially are a bit on hold because they are focusing on their portfolios and their existing managers and so forth. Then I would say on growth side, there is a bit of an impact. I mean, we had a big fundraising in Supermetrics lately, and there was a lot of interest. And we had kind of, in the end, we had 10 growth funds globally in the kind of finals, but actually 3 of them withdrew because of COVID and saying that they will only now focus on their existing, even though they otherwise had done all the business DD and so forth. So, but still 7 wanted to invest, and we did a great round. But there is some impact there on the growth side, because they have to preserve capital for their existing kind of commitments and portfolios.
Just to one last thing, I think what we've advised our companies is, be 20% better. This is actually not me saying this. This is actually an investor who said it to one of our companies. But we've told them that, hey, go 20% higher on your MRR. Make sure you hit all those KPIs. So if you can raise a bridge, or if you can extend your runway now, just go in a little later, because then you really stand out from the typical Series A crowd. And I think this is one way to impress the investors that you don't have so easy way to meet right now.
That's absolutely the case, and I think one of the things we've seen, I mean, you both Sakari and Patrick mentioned kind of traction and proof points as the key to kind of securing investment from the investors that are still in the market. Obviously, we've seen some incredible traction from businesses that have businesses that are kind of weighted towards kind of COVID related themes, so kind of digital delivery of products and things like that. I guess, how do you guys within your funds think about those themes playing out when, at some point, fingers crossed, some of these kind of COVID themes start to kind of pull back and kind of the world recovers from a global pandemic? Riku, how are you guys thinking about that in terms of the IceBraker portfolio?
So about the future, I don't know. I think there are very strong. I think there are kind of very strong trends, and from a founder perspective, I mean, you would always want to be kind of riding on a good trend that's going to be growing. So in that sense, I think the ones who have gotten boosted by COVID, like, it's not like they got lucky, they got a bit accelerated, so they were kind of in the right place already. And for founders, that is kind of what I would be kind of maybe learning from this, that in a long run, it's such like it makes such a big difference to be in a growing market and believing in a trend and riding that trend. So I think it will continue. I don't think any of the trends we've seen in COVID like stopping, like even for these online events. I mean, it would be great to be at the cable factory again in Helsinki and having Arctic there, but I think we'll still be seeing a lot more of these online events continuing. So I think that's true for everything. And then, like, well, probably the ones who are hit hardest, like hotels and travel. Yeah, I think they will also have to kind of should also have already been kind of adjusting to a reality where more and more is online anyways. So I think we've seen it accelerating, but I don't think this is like a short-term trend because of COVID.
I think for us, this has actually strengthened our investment thesis. Since start, we are focused on data-intensive software with some great innovation, but then with some really good scaling model. And this kind of the go-to-market model that you really can sell kind of even remotely, even online with getting effectively, efficiently new users, new customers engaged, using your product, getting them converted to commercial tiers and so forth with kind of smooth sales process, even online, remote, over phone and so forth. That has just kind of strengthened, and we see that across our portfolio and also in the future, that kind of the days when you have to meet a lot in person, work a lot in person, have long meetings and projects to get something implemented, that is more and more in the past. Of course, that will exist as well, but our focus has kind of strengthened on the scaling side.
Nothing really to add, but just to put that in different words, what Patrick ended there is I think marketing will have more pressure out of the functions, and hires in marketing will be done earlier and I guess more carefully. So models that have direct sales are not easy to raise for, and models that have a lot of remote, a lot of inbound and marketing driven things will be more attractive. But I think marketing has become more important, lead gen.
Yeah, we see exactly the same thing. We've been thinking of it in terms of Jeffrey Moore's book, kind of Crossing the Chasm. So, this idea that the chasm that SaaS founders had to bridge and kind of answering objections like, what's the ROI of this software? That chasm is closed, and people don't need to kind of think about the ROI of Zoom anymore. They need Zoom for their business to work. But the question is, it is more kind of, can you find a way to get around kind of long enterprise sales cycles and things like product-led growth obviously have been themes there. Aware we have kind of a little bit of time left, but one thing I really wanted to find time to discuss was sustainability as a theme. Obviously, this is something we've seen kind of be partly LP driven, partly GP driven. How are you guys thinking about that in the context of your own funds? Patrick, you're kind of smiling broadly.
I see it actually market driven. I'm kind of an optimistic for the world and for people's thoughts around this, and we see that consumers care, and increasingly business customers care because their stakeholders and owners and maybe investors care, but employees care, and across our portfolio, the people that we employ, kind of younger generation, they really care a lot, and the founders care. So there's a lot of this caring about the future and the world and so forth, which everybody wants to take into account. And that's why I actually think that it's smart kind of business strategy to care about this, because that will drive the best revenue development longer term if you build a sustainable, responsible company and business model.
Definitely, and still to add to that, like looking at the market, we've actually made an investment in a company that is kind of purely in the sustainability space. So kind of making it a business as well, that new regulations and also like the kind of changing world in general, new types of investments from large investors are driving a market where you can actually build a business in sustainability. So it's not just about kind of being a good citizen and looking good, but there's actually business in kind of creating a more sustainable world. And I think that's very interesting. I think it's very important. I mean, that's the way we're actually going to kind of make a very fast, big change, is to make it profitable to create companies that are, capturing carbon and so on.
Yeah, I mean, and also for all of us software investors, I think a lot of this is inbuilt besides the generation that is building these companies. But with SaaS, the businesses are built sustainably, and a lot of the models are models that drive, these values. So less travel, and less consumptions of resources when we produce our services and products.
Completely agree. And for anyone who's kind of watching this, who has an interest in that as a theme and how SaaS can be used to deliver sustainable business, my colleague Ingrid is hosting a panel a little bit later in this track with 3 SaaS startups from the Nordics who are addressing exactly that challenge. Good. Well, thank you very much, guys, for taking the time. And yeah, I guess I'd like to kind of wrap up by thanking each of you for joining us and sharing your experiences. And if you're a SaaS entrepreneur in the Nordics, the 3 people with me in this chat are good people to get to know. So kind of get out there and connect with us, Ox, and OpenOcean and Vendep and IceBraker. Guys, thank you very much.
Absolutely. Thank you so much.
Thank you.
Good day, everyone.
Thanks, guys.
Thanks. Bye.